Good morning, good afternoon, good evening. Welcome to today's Friday Fix, where myself and the lads from AP Research, formerly known as AlphaPicks, I don't know what's going on there, but I'm sure we're about to find out, where we will be going through all of the topics and themes of the week. And a bit of a rundown, etc. Probably a few rants, hopefully a few stat attacks from our dear friend Alex, etc., etc. But before we go any further, I will be giving you the legals. As usual, nothing discussed in this space session constitutes trading or investment advice or involves any kind of endorsement by PiQ, AlphaPicks, and the lads and me, basically. There you go. Don't trade on anything we say on this thing, is the TLDR.
Do you know
How
what? I actually think you still have a relaxed tone of voice which shows me that the holiday for you has still spread into this week.
Oh,
which makes me happy.
No, far from it. I'm completely stressed out already. But it's Friday and I'm just kind of losing the will to live.
Yeah.
But I wish it was, mate. I wish it was. But no, I'm already planning my next one, I think.
Well, I mean, it's good for engagement as well, as much as anything else, isn't it? I mean,
well, yeah.
let's not go down that rabbit hole.
Right. Moving on.
Moving on quickly.
What's been happening in markets apart from mimosas?
Yeah. Well, I thought actually let's kick off with the most immediate news, which you could argue the markets have been sort of waiting on for certainly the past few days, which is our mutual friend, Mr. Jerome Powell, who will be speaking this afternoon at Jackson Hole.
Yeah.
And obviously I think there's been a lot of coverage of it, so I won't sort of rehash it too much. But essentially he's in a little bit of a predicament whereby he's got a situation where the labour market's looking increasingly fragile. Obviously the revisions from payrolls was obviously pretty shocking. So on the one hand, you've got, okay, well, let's speed up the pace of cuts and that helps everyone else, Donald Trump get off his back, yada, yada, yada. But on the other side, you've got basically what I'd call sticky inflation. And you've got, hot wage growth. So it's kind of like, on that backdrop, does that justify cutting rates as much?
I think one of the clear things here is, obviously Fed minutes are so, I hate referring to Fed minutes because by the time we get them released, we already know what the inside line is on the thinking behind the decisions because of how frequent governors now talk to the media. But they have really rammed home the point that inflation is their number one kind of, their number one the kind of focus right now. So, yeah, I get the jobs situation, but the thing is that I think the Fed know the job situation. Well, the BLS data is so fucking shit. Like, no one knows how accurate it is. Like, I think inflation, at least we've got a handle on the accuracy of inflation. And I think this is where, why we should focus on that. Although, counterpoint, as I posted today, this week, I really do not believe that central bank rate setting has any impact on interest rate. That's right, on inflation.
Yeah, I saw that.
People might bite my head off, but we're not in the pre GFC, pre kind of all these weird and wonderful monetary policy tools. Yes, inflation had a large part to play. Interest rates had a large part to play in inflation, but these days there's now we're the world's been it's never been more globalized with global supply chains. I really, really do believe that fiscal policy, global trade agreements, global supply chains, and non-rate setting monetary policy, i.e. QE, etc., has a far bigger part to play, than rates, because central bank, Fed come out and cut 50 basis points, or hikes 50 basis points. Is that really going to impact inflation when you've got everything else going, with trade agreements and tariffs and what? Is that really going to move the dial? I don't believe it does anymore.
I mean, certainly the delayed impact of it filtering down into the economy takes time, for sure. I mean, obviously that's always been the case, but yeah, I suppose the counter argument to that would be is that, even if what you say is the reality, market perceptions will still probably track central bank actions as a precursor to it anyway.
Absolutely.
Yeah.
And I think, and that's the key thing is like, yes, it's basically, it's one of those things that because it's been taught and been ingrained so much that you're not going to get people, agreeing with you on this. But Yeah, I just think it's one of those things that if we really dive down, I think you'd be shocked how little impact it does have. It almost feels like, sometimes it almost feels to me like inflation and the interest, where the level, and the level that interest rates are set at, are basically determined by the same things, which is fiscal policy and other forms of monetary policy and where we are going, in terms of the economic outlook. Those are the things, it almost feels to me increasingly so, that inflation and the interest rates where it's set are dependent on those other things, not one thing leading the other. If that makes any sense, I don't know. It's been a long week.
No, that is a nice little rabbit hole to take us down. I suppose coming back up for air. So for Powell today, what's your take? I mean, given that I've just got it here, so basically just under 2 cuts are priced through to the end of the year at the minute, 47 basis points of cuts priced with obviously the 3 meetings to go. Do you feel Powell says, actually chaps, we're going to be data dependent. I'm going to tread this line, not going to commit to anything. Basically, let's see the next CPI print, blah, blah, yada, 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 PCE. Or do you think he goes one way or the other, i.e., no, actually, market slightly mispriced on the 2 cuts, or actually, yeah, do you know what, we're going to start and rock and roll, let's do 3 cuts? Where do you think he sort of sides?
I don't think for 1 second it'll be the latter. There's already a lot of shit flying in his direction. Why is he going to make more of a rod for his back? I think the only Fed speakers that are coming out and being uber dovish are the ones that are either non-voting or the ones that are looking for the job, for Powell's job. I think anyone that's voting that, is trying to stay honest, is kind of saying, look, we need more data, perhaps like one more cut. But, I think, it's a difficult one. Again, they're trying to thread the needle, right? Which is incredibly difficult. At one argument, you've got Trump giving it the big and saying the economy's never been better. But then he's saying that we need to cut rates now. Now, anyone that has any idea whatsoever about economics knows that these two things aren't compatible. But this is very clearly Trump talking with his retail investor head on. It's like residential, real estate investor hat on. If I was Powell today, I would be caught, very much, walking the middle, the path of least resistance, which is just the neutral path and being data dependent, seeing where it goes, a bit onto Trump administration and say, well, look, give us more clarity where we are in tariffs and we can make a decision. But, we're still hearing from, the Trump administration that deals are weeks away, but they've been weeks away for months away. It'd be an interesting one. I wouldn't be surprised if we walk away, if we're reading this tomorrow morning or whatever, when all the fallout's kind of settled down. And, really it's been an absolute nothing burger.
Classic. Go on, Jay. Give us your thoughts.
Hopefully, I've got a good signal that Spaces is saying it's reconnecting, so hopefully we're fine. I think it's kind of the boring answer that Powell will just keep it alive and will probably just reiterate everything he said before. But I think the big thing for the debate on the September cut is actually going to be the August jobs report at the beginning of next month, and then also the revisions.
But hang on, but on this, Jay, they're really clear in saying that their focus is inflation, right? They're really clear about that over jobs, right?
Yeah.
And also, like I said before, the jobs data, if we go by NFP, right? If we're going by that data, we know for a fact that data, and the Fed know for a fact that data is bullshit. We're getting huge revisions every month now for the previous month, previous 2 months, previous 3 months. And then we're getting revisions every 6 months or every year to the tune of millions, right? So this then brings me into the other thing I'm going to rant about at some point, and probably have to bring back Ryan's rants, is that for a long time, well, forever basically, ADP has been seen as the ginger stepchild of jobs data. Right? It's don't bother about looking at ADP. It's bollocks. It means no reflection at all on NFP, which is fine. But what I will say is it's the government it's a government entity that's putting together the NFP data, and that is by their own admission, due to the revision sizes that they're doing, is complete bollocks. Right? That headline number is complete bollocks every month. We know that for a fact because it's been revised so massively every time. ADP data. Who's to say that that's not the truer reflection on what's going on? Now, again, it ties me back into my idea that interest rates have no fucking reflection on inflation at all anyway. But you try telling people that, and you try getting people to get behind that, you won't get them to do it. It's the same with NFP. Like, I now truly believe, based on the fact that BLS say themselves, or show themselves, that NFP data is bullshit, the headline at least. Why shouldn't we be focused on ADP? ADP might be the data that really should be mattering. But of course, for that to have any impact on markets, you need every other fucker to believe you. So yeah, bring back Ryan's rants, basically.
Well, we've got a debut comeback in today's space. Yeah, I do agree with your point. There probably does need to be a change of what data they're using and how they collect it to have more accuracy. I think the Fed and, well, Powell is just going to stay data dependent, and there still is more data releases before that September decision. So I think it's probably a nothing event. By the end of today.
Well, after Ryan's rants, we can segue nicely into Stat Attack, which is another one of my favourite parts of the programme.
Go for it.
And this actually tied in 3 stories in one from this week, which I thought all were very interesting and noteworthy, relating to retail investors. So the first one, if you saw, Goldman put out a report early this week about retail investors being basically a growing force in the stock market. So on the peak days this year, what percentage of S&P 500 volumes have been made up by retail investors? As a percentage.
Sorry, say that again. So rephrase the question again. Sorry, say the question again. Sorry.
So on the peak days, peak volume trading days this year for the S&P, what percentage of those volumes have come from retail investors?
Ryan, make me mark it.
Oh, I don't know. Can you go first on this one?
I've got no idea.
God.
I don't know what it would be on, like, less than peak flows, so I don't really know where to benchmark myself with a guess here.
It's less than 50%.
Well, I was going to say 25%. So I'll go.
I'll go then higher than 25.
You say 26. I'm going to come down there and kill you.
26, yeah.
28.
Oh, you bastard!
28.
You fucking bastard!
So 28%, which obviously, is not an insignificant part of the market that they're performing. And this tied in with 2 other stories that caught my eye. One was Vanguard, and if you saw this one, they're basically planning to launch some more actively managed ETFs, both on like dividend stocks, growth stocks, bond strategies, etc. But basically, pushing to try and take advantage of investors wanting active ETFs versus more passive stuff. And then the other one was obviously our friends at CME, have teamed up with FanDuel, to basically offer event-driven contracts, which obviously kind of are becoming a big thing, tying to, it's like gold, oil, S&P, where it closes up, et cetera. And they're basically obviously going to make a push in that avenue. So my question is a lot of big companies are looking at retail as the place to be. And do we think, because post-pandemic or during the pandemic, we had that surge in retail investor interest in the markets. Do we feel that actually this is in some ways signaling the top, or do we actually think that retail participation in the years to come can still move higher?
I think, of course, it can move higher. It's interesting with CME and FanDuel. People that have any idea about what's been going on with CME will know that these event contracts have actually been there for about a year or even longer, but they've just not promoted them. So it did make me laugh when they announced this joint venture with FanDuel yesterday, when Big Tel announced it. But the contracts have already been there. And the CME, they know they've missed the boat. We're all massive fans of CME here. The big supporters of PiQ even. Yes, they'll be the first to hold their hands up and say we missed the boat, and that over COVID we did let other companies such as Robinhood, etc., really take a huge market share, and that's because CME and the likes always look down their noses at retail. But you can't ignore retail, and retail is only getting more experienced and retail traders are getting more advanced. We've come a long way than just a bunch of retail traders getting their crayons out and drawing on charts. They're becoming far more sophisticated, which is only a good thing. Hopefully, PiQ can start servicing a lot of those guys themselves, and same with AlphaPicks. So I think, funny enough, I had quite a lengthy discussion today. It was our weekly board call for PiQ. Yeah, and we were talking about exactly this, and we were saying, look, yes, it'd be great to kind of dig your heels in and try and try and say to retail guys, look, try and educate yourselves, bring yourselves up to higher levels, and then be more professional. But there is such a huge number of retail traders out there that don't want to bother learning about the ins and outs of thematic research and macros and all stuff like this. They want a gamified way to participate. Now, you cannot ignore those huge numbers of people. So my opinion is now, and gradually kind of coming around to it, obviously retail is all new to me, my background professional trading. But if people want to stay, amateur or stay with a gamified outlook, now I think it makes business sense to service those needs.
Yeah, I do. I mean, the point I would add to this is that you have this funnel of, if you think of sophistication of investors moving further down the funnel, and obviously it narrows as they become increasingly sophisticated, is that the other thing is, I think we're certainly like with CME and to a certain extent with Vanguard, with these active ETFs, is that they're basically trying to pick up as many as you can from the top of the funnel. So Absolutely. It's like if the gamification of the event-driven contracts, or if it's even, the mums and pops or whatever that basically love ETFs and want people to do it for them to begin with, then it's like having that provision just gets more people from not investing to having some interest. And then obviously I imagine as part of the strategy is then through clever marketing and other bits and pieces, they move down the funnel to become more sophisticated, increase their product knowledge, et cetera, et cetera. So from my perspective, I agree with you that retail interest can continue, and it's actually these top of the funnel features, if you like, that's what's going to draw and increase more people in.
Well, this is it. I think exactly that. You've got to cast your net wide, right? Because you're going to get attrition as it moves down to the more educated, and the more educated is the wrong word. I feel bad saying that because there's it's not saying you could stick with very basic outlook and like very gamified playing of the market and still be educated. We're not saying that people that want to just trade event contracts are dumb, but that's not true. That's not true at all. It's horses for courses, and everyone has their own favourite way of participating. But I think my opinion is, it's right that these companies, these huge institutional institutional experts in markets, are looking to cast their net a lot wider and saying, there's enough out there now. Retail, there's enough money behind retail that they need to start courting them.
Yeah, agreed. Moving away to a couple of other little bits, we had almost developed a segment on when is Alex going to trim down his Palantir stake.
Oh God, yeah.
And it has happened, this week.
After timing.
Yeah. So obviously Palantir's taken it's down 13% so far this week. And it's interesting because even though results were actually, pretty good when they put them out, I think it was Monday or Tuesday. Anyway, quarterly revenue topped $1 billion for the first time ever. So, they are still performing very well.
Yeah.
But what I think it goes to show is not so much that the stock was in a crazy bubble, but the sensitivity, partly with the retail crowd, definitely, that some of these sort of really high beta names have. And obviously that ties in with the sort of the move low we've seen in tech stocks this week, and in the NASDAQ in general. We've still got a lot of the market being driven on sentiment, even if you put out earnings that are actually pretty decent. So, trim some of the Palantir. Putting it out there.
Well, I'm proud of you, mate. I'm proud of you.
Thanks. Thank you. Moving to cash. And then the other one, I know we're going through a wide variety of stories this week. I don't know if you saw this one, the one I was very interested in, OnlyFans.
I bet you are. I bet you're interested, mate.
So we'll hit a little stat attack on this one. So let me hit you with this. So
8 inches.
Higher or lower. the recent filing for their latest annual report showed $7.2 billion in payments processed through the platform, which was up from 6.6 billion the previous year. Which is crazy. And obviously OnlyFans basically take a 20% fee. It's a very low operating cost basis. It reported having 46 employees, for that period of time. Significant remuneration for those people. And fan accounts were up 24% over the past year. So it's a private company. They're obviously the reason why this story's come out is because they think that they will look at a sale with a valuation around $8 billion. But it really goes to show that there are some businesses, some obviously private businesses that are still out there that are growing rapidly and making a ton of cash.
Well, this is it. I think isn't their tax revenue number, isn't the tax they pay higher than the North Sea oil revenue from the UK receives? I think that was a stat I learned recently.
I mean, it wouldn't surprise me because they are listed in the UK and as just a regular limited company. So yeah.
I'm pretty sure they pay more tax than the UK receives from oil revenues. From North Sea oil revenues, which is mad.
More about the UK than it does OnlyFans.
Yeah, but yeah, exactly. Well, funny enough, I tweeted literally minutes before we came on. Obviously, Norway have just announced a new massive discovery in the North Sea. I said the two things that this, firstly, it makes me laugh why people say that there's no more decent-sized discoveries to be made in the world because as technology advances, you're always going to find more oil. But also, it's fucking ridiculous how the UK, under Labour government, is turning its back on fossil fuel resources that are in our own territories, especially when we've got this giant black hole. But going back to OnlyFans, people do realise that you can get porn for free online, right?
Well, but Brian, OnlyFans is for creators of all forms.
Yeah, right.
Cooking, fitness, you know what I mean?
Whoa. So they actually do have non-porn on OnlyFans?
They do, absolutely.
Fuck off.
Yeah. I think Jesse has a subscription to, classic French cuisine recipes.
Oh, cuisine. Sorry. I wonder where this is going.
Classic French what?
Yeah. Okay. Well, yeah, but still. Yeah,
but that is valid. That I think one of the factors that will put off any potential buyers from taking on OnlyFans is obviously the very murky world of online safety and XYZ.
The stat attack for next week is what their revenue split is across categories.
I mean, I'm not sure they report that, but look, if I have to do some research, then I'll contact the company. I mean, don't get me wrong. I mean, it's heavily skewed. I mean, whatever, I don't know, 80% probably comes from adult content, but I don't know.
Surely, fair play to them, I guess.
Surely they've got to be up there with one of the highest revenue per employee companies out there because they're so small.
Yeah, must be.
Yeah. Obviously, it's heavily concentrated with Rudvinsky, who's the mysterious owner of it, who basically paid himself $701 million as a dividend in the latest year. As you do. But yeah, I thought it was an interesting one to
No, it is very interesting. I'm in the wrong game.
Yeah, we're in the wrong game.
New branch of
but
PiQ.
Anyway, that's all.
Yeah, absolutely.
PiQ fans.
Well, this is it. Or I'll sell pictures of me feet, whatever works, to be honest. I don't care at this point. I just need some money. Right. What else?
That's it. That's it from me.
Right. We can't end on that. Right. Anything to add? No, is he gone? Oh, we've lost him. Oh, thanks.
Actually, no. Do you know the one I'll finish off on, which I saw? Howard Marks.
Stop. Whoa. You're finishing off on me. What?
It's really spiraled out of control. Apologies for our listeners. Howard Mark, Oaktree Capital founder, very well respected in the game. He had a Bloomberg interview on Wednesday or yesterday. And basically he's saying that he believes we're in the early signs of a bubble in US equities. I don't know if anyone saw this, which I thought was quite interesting. And he cited basically lofty valuations, the lack of any significant correction, which I'm not sure if he forgot about April, but anyway, he was like, we haven't had a recent meaningful correction in the markets to take some of the exuberance out there. And the other one was like a lack of essentially corporate earnings tracking, implied versus actuals on where corporate stand. So, putting it out there, Howard Marks is not a particular doomsayer as, some of the others out there are. But yeah, his opinion is that pivot more into defensive assets, credit, etc.
Yeah.
Which is probably more of a theme for us to finish on for the Friday fix.
And one of our friends that bumped into Mr. Howard Marks recently.
Yes.
Liam, who is listening on the show. Hello, Liam. Apparently a really nice guy. Well, he put up with Liam badgering him and his wife for a bit of a
picture.
Yeah, exactly. But no, fair shout to him.
Yeah. So there we go. That's a better one to end on.
Awesome. Well, guys, it's great to catch up with you all. We do need to I need to pull my finger out, and there's so much going on at the moment. There's got to be more we can be doing as well between PiQ and AP, which is good. But listeners, thank you so much. AlphaPicks guys, definitely check them out, or don't check them out. Follow them for fuck's sake. Subscribe to their Substacks. It's fucking amazing content. Get involved. But guys, thank you so much. Everyone, whatever you're doing this weekend, keep it tight, stay safe. And we'll see you all next week. Much love.
Awesome.
Thank you very much, Brian.
Thanks, guys.
See you later.
Hey guys. Bye bye.